Francesco, I've had a lot of conversations with people over the last week, a lot of analysts, a lot of traders out there, and everyone seems to tell me that the capital and liquidity situation of the European banking system is so much better than it was a few years ago. The big unknown, though, the big question mark is that of trust and of confidence in these banks. So how do you fix that?
Yeah, there's only way to fix it, and the only way is reminding the market that there's a lender of last resort, and there's an implicit public guarantee, at least on the deposits. That's what we saw the market in the US asking the politicians. Politicians at the moment are a bit, they don't want to provide this guarantee, which is, politically speaking, very hot topic. But we saw it in Switzerland. Yeah. The only way to really fix the problem, if a bank has lost the trust, market trust, is to go heavy, all in, and ensure that there's a guarantee.
Which is ironic, because post-2008 there was a reevaluation of the whole too big to fail policy, and a politician's desire to move away from using taxpayer money to bail out these banks towards more structured resolution mechanisms. But at the end of the day, even in the case of Credit Suisse, UBS, yes, they're calling it a commercial bailout, but you still had 9 billion francs worth of indemnity from the Swiss government and another 100 billion worth of guarantees from the SNB.
Yesterday, the Minister of Finance in Switzerland admitted the bailout regime as it is doesn't work. However, with respect to 2008, the situation is very different. We have much more bank capital at stake, and the bank capital is used to solve these problems. I mean, if we look at shareholders and bondholders, both in Silicon Valley and in Switzerland, they lost most of their money. Okay, shareholders for Credit Suisse, maybe they were
token. Yeah. But
token, but they lost most of their money, right? And they will have a very hard time recovering that money. So in a sense, the Credit Suisse deal was very much helped by the capital behind it. 16 billion in 81 securities were burned overnight to help save the bank. So this effort that the European banks and the US banks took after the great financial crisis actually has having an impact, and is helping the government.
Isn't that going to have a permanent effect on the cost of funding for European banks going forwards?
I think it's a permanent damage. On the other side, I have to say we are much more optimistic on 81 securities in Europe. We have a couple of fundamental differences. The prospectuses are written in a different way. The regulation is different, and the EBA and ECB on Monday, they came out last Monday and said, listen, we are not going to do the same thing that the Swiss regulator did. It's fundamentally different. And we have also to remember that the European Central Bank values a lot this market. You may remember during COVID, they protected the payment of coupons. They came out immediately last Monday. We firmly believe that they value a lot this market. This market is worth almost 20% of total bank capital available in Europe. It's shy of 300 billion, but it's a lot of money.